Welcome back. 2024 was a record-breaking year for stock markets, and so was 2023. The markets have enjoyed 2 consecutive years of double-digit percentage gains. Those are the U.S. stock markets. But our next guest says that while many strategists continue to expect U.S. markets to outperform in 2025, he believes we are sitting on something he refers to as the mother of all bubbles, and it may be time to start betting against American exceptionalism. Let's bring in our next guest, Ruchir Sharma, chair of the Rockefeller International Institute and founder and CIO at Breakout Capital. Ruchir, thanks a lot for joining us. You're certainly correct that most Wall Street professionals are expecting another year of gains after 2 remarkable year of gains. Why do you think they've got it wrong?
Well, what I say is something a bit different, which is the fact that I call this concept of American exceptionalism to be a bit of a bubble. And that's because even though we are very focused on the US stock market's performance over the last couple of years, I stretch the lens back a bit to the last 15 years. And the American market has done really well for 15 years. And as a result today, the American market today is nearly 70% of the global equity benchmark. The American economy is still under 30%. So this is a huge disconnect between America's market cap in the global equity indices and America's weight in the global economy. So this exceptional performance that America has had has also been turbocharged by the dollar's strength. And I think that all these things are looking very stretched and very overvalued just now. So it's not so much that I'm worried about the US market per se, but I am much more concerned by the gap between America and the performance of the rest of the world, and how everybody I speak to thinks that this can only continue, that the dollar will only get stronger under Trump, and the American market is only poised to gain, and no one is interested in investing anywhere else but America. I think that this concept, to me, seems very bubbly.
So what does this mean to your outlook on U.S. stocks in 2025? You said at one point you're not concerned about the U.S. market, but what you're concerned about is the gap in outperformance of U.S. stocks versus stocks elsewhere in the world. Do you see a significant correction in U.S. stocks in 2025?
Well, I think that it's possible we get a significant correction, but what my stronger view is that America's outperformance versus the rest of the world can't continue at this pace. And that, in fact, I think that the rest of the world's stocks are likely to outperform those of America in 2025. So I think that for me, that is the really big contrarian view to take. And very few people, if any, are willing to bet on that, which only gives me greater confidence that groupthink has never been this stronger. And in financial markets, the best way to make money is really to bet against such strong conventional wisdom, as is the case today.
Which international geographies do you prefer over U.S. stocks in 2025?
Well, practically every geography, I would say, which is the fact that it's the most unfashionable place to be just now is Europe, where everyone is extremely negative and obviously for fundamental reasons, but therefore European markets trade at half the valuation of the American market. And then even emerging markets, which have some good growth prospects. And yet I can find many emerging markets in the world today, from Poland to Philippines, which trade at, again, half, if not 1/3 the valuation of the US market, despite having much stronger growth prospects. So there are plentiful markets outside the US to invest in, just that no one is interested in touching those markets because everyone's given up on the concept of buying emerging markets or diversifying outside of the US, since the US has done so well over the last 15 years.
Professional investors who favor the U.S. market, and there are many, as you have said a couple of times here, say a couple of things. They say the U.S. economy is by far the strongest and most dynamic and most growth-oriented on the planet. They also say the U.S. stock market is home to the best companies in the world. They'll say things like there's only one Apple, there's only one Microsoft, there's only one JP Morgan Chase. What do you say to those arguments?
So I've been a big fan of the US market as well. That's where I live. And 10 years ago or so, like I wrote my first book in which I called America the breakout nation. Even at the beginning of this decade, I called America the comeback nation. And saying that 5, 10 years ago was a fairly contrarian view to take. Today, it has changed dramatically where everyone recognizes America's incredible strengths, and there are plenty of those. But I think there's a price to be paid for everything. And I think that the idea that these strengths of America will lead to America like outperforming year after year for the foreseeable future is also something which is, I think, a mistaken belief. And that's not borne by history. Yes, the American market has outperformed over the last 100 years or so. But if you look at the last 10, 11 decades, in at least half of those decades, the American stock market has underperformed the rest of the world, particularly after it's had a great stretch. So I see all the strengths of America, and I've been a big believer in that. I just think there's a price to be paid for everything. And the American stock market today is very expensively overvalued compared to the rest of the world. The dollar is very overvalued. And I think that we are overlooking some of the drivers of what has taken America to these very high GDP growth levels. One of them is the fiscal deficit that's running at 6 to 7% of GDP, far higher than any other major developed country. At least on average, those numbers are a fraction of what America is running. Similarly, I think that the dollar today is the most expensive that it has ever been in its floating rate history by some measures. So these are all facts that could undermine economic growth rather than boost economic growth further from here. And especially if the market's attention turns more to America's twin deficits, because the current account deficit is more than 4% of GDP, the fiscal deficit is more than 6% of GDP. If the market's attention turns to those factors, then I think it'll be hard for America to keep sustaining these growth rates, and the cost of financing is likely to go up.
Ruchir, thank you very much for this conversation. Ruchir Sharma, Chair of